On-balance volume measures buying and selling pressure as a cumulative indicator that adds volume on up days and subtract volume on down days. OBV was developed by Joe Granville and introduced in his book 1963, Granville's New Key to Stock Market Profits. It was one of the first indicators to measure positive and negative volume flow. Chartists can look for divergence between OBV and price to predict price movement or to confirm the price trend. The on-balance volume line is simply a running total of positive and negative volume. A period volume is positive when the close is above the prior close, and it will be negative when the close is below the prior close. The theory behind OBV is based on distinction between smart money, namely institutional investors, and less sophisticated retired investors. As mutual fund and pension funds begin to buy into an issue that retail investors are selling, volume may increase even as the price remains relatively level. Eventually, volume drives the price upward. At that point, larger investors begin to sell, and smaller investors begin buying. Granville theorized that volume precedes price. OBV rises when the volume on up days outpaces volume on down days. OBV falls when the volume on down days is stronger. A rising OBV reflects positive volume pressure that can lead to a higher price. Conversely, falling OBV reflects negative volume pressure that can foreshadow lower prices. Granville noted in his research that OBV would often move before price. Expect price to move higher if OBV is rising while prices are even flat or moving down. Expect price to move lower if OBV is falling while prices are even flat or moving up. The absolute value of OBV is not important. Investors should focus on the characteristics of OBV line. First, define the trend for OBV. Second, determine if current trend matches the trend for the underlying security. Third, look for potential support or resistance levels. Once broken, the trend for OBV will change, and these breaks can be used to generate signals. Also notice that OBV is based on closing price. Therefore, closing price should be considered when looking for divergence or resistance breaks. And finally, volume spikes can sometimes throw off the indicator by causing a sharp move. If today's closing price is higher than yesterday's closing price, then current OBV equals to previous OBV plus today's volume. If today's closing price is lower than yesterday's closing price, then current OBV equals to previous OBV minus today's volume. If today's closing price equals yesterday's closing price, then current OBV and previous OBV will be equal. On-balance volume is a simple indicator that uses volume and price to measure buying pressure and selling pressure. Buying pressure is evident when positive volume exceeds negative volume and OBV line rises. Selling pressure is present when negative volume exceeds positive volume and the OBV line falls. Chartists can use the OBV to confirm the underlying trend or look for divergence that may foreshadow a price change. As with all indicators, it is important to use OBV in conjunction with other aspects of technical analysis. It is not a stand-alone indicator. OBV can be combined with basic pattern analysis or to confirm signals from momentum oscillators.